Hello and welcome to Political Capital. This is where money meets power. I am Karabole Tata, and here's what's coming up on your show today. Is the Reserve Bank just a proxy for a bigger political battle? We discuss a divided ANC within a divided government and an economy in troubled waters. And staying with misery, it seems to attract more unwanted company. Despite having the second highest gold reserves to Australia, South Africa is now second producer on the continent behind Ghana. But why? We find out more later in the show. But first, was the attack on the SARB mandate a scene setter for the ANC and its alliance partners to transition into a new political alignment ahead of the ANC's National General Council? Here's our report.
The President-elect, would you please raise up your right hand and say, "So help me God"?
Wasn't Cyril Ramaphosa's reign supposed to bring about certainty and stability? Barely a month after his election as president of South Africa, the wheels are seemingly coming off. Just when the markets thought their man was in charge, another came along. The ruling party's Secretary General, Ace Magashule, dropped a bomb by announcing a decision to expand the Reserve Bank's mandate beyond price stability to include employment and growth. This was the second hit on the currency, all in a single day. The rand was battered by a perfect storm of contracting GDP and the ANC's economic own goal.
It was an ongoing in the sense that the public disagreements that followed between ANC officials caused a lot of confusion in the markets and also in the public generally. So that really was something that was not needed.
Magashule's comments about expanding the Reserve Bank's mandate left a 1% bruise on the rand, weakening further from 14.66 to the dollar on Tuesday to reaching 14.83 by Wednesday evening. The slide spurred Ramaphosa's money men into defense mode.
Nobody is talking about changing the mandate of the South African Reserve Bank. That mandate is very clearly stipulated in the Constitution. And I don't understand why the obsession about the central bank all the time. Why we say things which we know are going to destabilize the market. Why? What's the purpose? What is the nature of the problem we're trying to solve?
We don't comment on the pronouncements of political parties, whether that political party is in government or not. The constitutional mandate of the Reserve Bank is very clear. It says we must protect the value of the currency in the interest of balanced and sustainable growth in the Republic. That's what it says. The architects of our Constitution were visionaries. They understood that price stability is a necessary condition for growth, but it is by no means a sufficient condition for growth. All the others must come in. So the central bank's contribution to growth is through price stability.
But despite the impact of reckless statements, the ANC remains divided, and the economy is just another casualty of this political contestation. Many in the ANC, and more so its alliance partners, are backing Magashule's economic viewpoint.
What is really worrying is, what is meant by changing the mandate of the South African Reserve Bank. I mean, we know over the past couple of years, we can go back to 2010 when Pravin Gordhan was still finance minister, and his correspondence with the then governor of the SARB, making it clear that, the Reserve Bank should not strictly look at inflation in setting interest rates, but should also consider other economic challenges in South Africa. And we know that, over the past few years, we've seen the Reserve Bank increasingly in its statements really making it clear that it considers the overall economy in its policy mandate and also, moving interest rates. So it is worrying, because it is not very clear what changing the mandate of the South African Reserve Bank entails.
What is clear now is that President Ramaphosa will need more men and women to support his stance on the Reserve Bank's mandate within the African National Congress and its partners. So far, the president is catching up with a contracting economy, the negative effects of his own comrade statements on that economy, and moving from crisis to crisis.
We are starting to see, policy uncertainty being elevated. Remember that we are still worried about the conclusion of the mining charter. We are still worried about the implications of, the suggested changes to the constitution to deal with the land issue. So those are enough really to keep the president busy, and bringing in, the Reserve Bank mandate at this stage is really adding to the pressures that we're already facing on the policy front.
As things stand, the country is held to ransom by a divided ruling party in a divided government, and potentially a perilous path lies ahead. As the line goes, like rands through the hourglass, these are the economic days of our lives. A divided ruling party, a divided government, and an economy on a potentially perilous path. Peter Attard Montalto is the head of capital market research at Intellidex and joins us via Skype from London. And in studio, we are joined by Associate Professor of Economics at Wits University, as well as a former economic advisor, Professor Chris Malikane. Gentlemen, to both of you, I thank you for your time. Peter, let me begin with you. How much of what we saw last week the mandate of the SARB was just the SARB being used as a proxy for a bigger political fight, especially when one thinks about the 2020 ANC NGC around the corner?
Good evening. Well, I think the key thing here is that there are different parts of the ANC arguing for different reasons around the SARB. There is what's broadly the Zuma faction, I think, arguing around access to control of banking regulation, wanting to have access to the SARB via nationalisation for things like that. But then there's a much bigger segment of the ANC, which has had a long-running debate about the role of the SARB in the second democratic revolution, around the role of the SARB in boosting growth and boosting employment. And so it's basically, I think, a sort of an unholy alliance of these two different sets of actors really coming to the fore at the moment.
Chris, what does last week tell you, especially when you look at the realignment, if you will, of former foes? As they say, there's no such thing as permanent political enemies. Is the ANC regrouping, in a sense, internally and externally as well?
Well, my view is that the ANC is faced with a challenge where some leaders, because of interest from outside, are beginning to behave in a manner that makes them deviate from the resolutions of the party. The party is clear, the Reserve Bank must be nationalized, and the Reserve Bank's mandate must be expanded to include employment creation.
So why is this a surprise to the market? You're saying that. I remember hearing that at the 2017 Nasdaq conference, but surely it's not the time to buy the bank because we don't have the money. Is it time to fidget with the mandate, and what would be the outcome, the desired outcome?
Let me start with the markets being shocked. The markets were shocked because they are used to ANC resolutions being adopted and the leaders who are elected not implementing them. So for the first time, the ANC is having a Secretary General who is able to read the resolutions of the ANC as they are, without any distortion, that these things must be implemented. So that is a shock to the market. Actually, the market was operating under the conditions where the ANC leadership was persistently deviating from the mandate that they are receiving from the branches of the ANC.
Peter, is this the future? More politicking, messing with our markets? Is that what you expect going forward? And really, doesn't that say that Cyril Ramaphosa spends more time trying to, if you will, restrain his own comrades than he puts into actively trying to grow the economy?
Well, I think this is the key point of what the shock actually was last week for markets. I don't think it was actually necessary, to follow on from Chris point around resolutions per se, or around the fact that there is a long-term debate around the role of the SARB. For me, it really was actually a process problem, and basically it went against all the reassurances that had been given by those economic leaders such as Tito Mboweni and Igor Golongwana in the past around when this would be dealt with, how it would be dealt with, especially. And I think it's more that process point that basically the presidency and the ANC hadn't learned to take control of the message on economic policy and on the SARB in particular. There was a much bigger shock, I think, and I think that's what really came to the fore with markets. And then the fact that we saw this oscillation in communications afterwards, where you saw conflicting messages coming from both Tito and Enoch, but also then from others on Twitter fighting back against what had been said. And that's why a statement from the president was so urgently needed, but ultimately came late. It would be much better if that had happened on the evening of that first press release.
And that was part of the question, the timing around all of this. I mean, these, announcements by the SG of the African National Congress were off the back of really poor GDP numbers. Was that the time to say such? And I'm keen to find out from you, Chris, why do you think we haven't heard any other minister come out to support the president?
Well, the timing is fine. For me, there's no other time, because the NEC, Lekgotla, was scheduled to meet. So it's meeting, it has to discuss, and it comes with the way in which they are going to implement the resolutions of the party. So the timing for me is neither here nor there. So they had to communicate to the people how they are taking the resolutions of the ANC forward. Now, in terms of other ministers not coming to support the president, I think the ministers responsible for the statement that created consternation in markets are the Minister of Finance in particular, and the official responsible for economic policy, which is Mr. Enoch Kotongwan. Unfortunately, the Minister of Finance and Mr. Enoch Kotongwan, what they mentioned was basically a movement away from discipline in the ANC, because the person authorized to articulate policies of the ANC, collective decisions of the ANC, is the Secretary General. So what they were saying is their own personal views and not the views that came from the Lekgotla.
Peter, this is almost becoming the narrative of the Ramaphosa presidency. I think he's going to spend a lot of time trying to restrain some of the more extreme policies of the African National Congress. But therein lies the problem. I think he needs more support if he's going to be able to succeed in that. Who else do you see coming to the president's corner? Because the governor of the Reserve Bank, quite frankly, coming out to say that, hands off the SARB, and we believe that we are constitutionally enabled. That's almost like the turkey really deciding on Christmas lunch, isn't it?
Well, I think the big problem here basically is this is just the first step in a wider policy contestation to come, and it does partly resolve around what resolutions of Nasrec actually were. And we have NHI, we have prescribed assets, we have land in the sort of broadest sense as well. On each of these issues where there's a need to prevent what I call fallout risk is going to be a massive challenge, and why this was really a first test, I think, to see if there was actually leadership or policy, but also leadership of communications from the presidency and the ability to correct mistakes around communications once they had actually happened. Now, this fallout risk thing I think is really important. It basically, I think, describes issues where even if you don't actually end up implementing a policy, you can actually cause huge economic damage in the interim through uncertainty for domestic businesses and much as other investors from the way policy discussions can actually occur. But I think we should also remember here there is a degree of desperation, I think, in government going into this SONA. What do you actually put in a SONA after you've had one this year already, 4 months ago in February, when you really have very, very limited room to maneuver? And I think actually the more interesting fact around the SARB is that a lot of these discussions on mandate and on things like fiscal policy were actually already started before the NEC meeting in government. And there really is a much bigger discussion actually going on behind the scenes around what happens next with policy.
Chris, how negotiable are ANC policy decisions that were taken in 2017, whether that was the June conference or the December elective conference? I mean, one is fair to assume that ANC has taken policy positions before without necessarily acting on them. What makes this time different?
because people have run out of patience. The resolution on the SARB, for an example, except the one on nationalization, but the one on broadening the mandate has been there since 2007.
Chris, you're an economics professor. Yeah. Help me understand. How is that going to fare better for this faltering economy?
Because if you put employment as an equal variable to consider by the Reserve Bank together with price stability or inflation, it's going to moderate the way in which the Reserve Bank sets interest rates. And we know that interest rates play a critical role in determining investment, consumption spending, and so forth, and even asset pricing.
But you're aware of the negative impact that fiddling with the Reserve Bank, whether from South Africa or in the United States, as you hear Donald Trump speak about, the Fed not listening to him, that is, seen as negative by markets.
No, but the markets in the US are doing well. The past 5 days, the equity markets have been performing well. Unemployment rate in the US has been declining.
Well, the jobs numbers are not quite what they were expecting, and that led us to a weaker dollar. But let's try and move this. Peter, is South Africa stuck in a low growth trap environment? I don't feel that we have a long sustainable solution to getting ourselves out of this economic rut, but I do feel like we tumble from project to project. Special economic zone, a little project here, raise money through an investor conference, but we don't really have a plan, do we?
Well, that's the key thing I think people are grappling with into this SONA is basically what is your plan? Do you look for things like some cheap, easy wins, looking at domestic content, things like that? I think that's what's currently on the table for the SONA. But there really is no big discussion, I think, in Pretoria at the moment on, for instance, rebalancing the state versus the private sector, those big piece economic policy ideologies almost that you need to start tinkering with to get growth going. And hence, I think people look for easy way outs. And I think that's the big problem on the SARB here. There's a big debate of if, the SARB takes into account employment. There's very, very weak linkages of growth into employment, given, the deep lack of underlying structural reforms, the lack of labor intensity of growth that we probably would see if we saw a pickup in growth due to any rate cut, say. But actually, you can think that the SARB already does include unemployment by having the output gap in their QPM model. That does account for maybe some of the underemployment that does occur, at least by proxy. And that's already holding them in a moderately loose position, or on the loose side of
hold you back. Yeah. I see you shaking your head. You have a detractor, Peter?
No, Peter, for a long time now, for quite a while, we know that inflation has been within the band, but the unemployment rate has been trending upwards, which shows that actually the unemployment rate or even the growth rate of the economy is being playing second fiddle to the inflation mandate. So what we are saying is that both must play must have an equal weight, because it's unsustainable to have rising unemployment with stable inflation. It's not helping anyone.
Peter, this ticking time bomb called unemployment?
Well, I think if you were to see a large 200 basis point rate cut, let's say to try and target faster employment growth to reduce unemployment, you would see a one-off spurt in growth for 1 year, say, but they would then fall back very rapidly. There's no real, I think, evidence at the moment that actually job creation is being held back by the cost of capital or the availability of capital. It's the lack of underlying issues around skills, around technology transfer, around these sorts of issues, around lack of policy certainty that's holding back job creation, not ultimately the stance of monetary policy.
Chris, am I likely to find more radical leftist policies like changing the SARB's mandate and action on the land question more than I will find market-friendly, investor-attracting policies being acted upon in the short to medium term?
I think in the short term, what you're going to have is the president who is market-friendly, who is going to ignore the resolutions of the ANC, which are to the left. And that is going to create political instability and political lack of political coherence in the ANC. And that is going to, at the same time, create a situation where it's unable to win the confidence of the ANC branches that adopted those resolutions. Yeah.
Peter, are you worried about the president's future? Because I am. If history serves me well, it was sometime in 2005 when the ANC had an NGC and one Jacob Zuma made a serious comeback at that particular gathering. Is the president in danger come 2020 ANC NGC?
Well, under the ANC rules, it's virtually impossible to remove a president mid-term, and the current balance of powers in the province mean you wouldn't reach the ANC constitutional threshold of 6 of 9 provinces to remove him. But I don't think that's really the strategy, to be honest, of the forces that are against him. I think it's more to box him in, to keep him under control during a first term, then to allow maybe others to come into the picture in 2022 in that elective conference. And so I think it's a longer game than just sort of next year. But I think the original sin here, if you like, to pick up on Chris's point, really is actually coming back to those resolutions. I think those resolutions were allowed to be passed as an easy way out. I think the president saw them as an easy way out in Nasrec. And now, again, there's been a boxing into the corner. And I think we'd like to see that on more issues as well. But on surviving, I think he will survive to serve at least one full term of as ANC president.
All right, Chris, my final question to you. How much detail are you expecting from a president who's really just catching up with what is happening around him? You know, a contracting economy, comrades running loose with statements, not even looking like they double check these things with him. Is the president in charge? Will he sound in charge come June 20th?
He has no option but to sound in charge. And he needs to, what he will do is to make sure that he becomes consistent with what he told markets. But that, in my view, is going to increase his alienation from the ANC, because it's going to move further and further away from the resolutions of the ANC.
Peter, final thought, is Project Economy Resuscitation really dead before it even got off the ground?
Well, Ramaphosa, I think, certainly is. And I think markets and investors learned that it was overplayed last year. I think the other point that people have realized is that cleanup is not the same as growth, and cleanup doesn't mean you'll get down the line. But really what we need to see here is a big deployment of difficult political capital to see the president making difficult decisions. And I think that's what will ultimately get sentiment back here. But after the events of last week, the bar has now been raised and a more challenging task ahead for the president.
Gentlemen, to both of you, I thank you. That was Professor Chris Malikane from Wits University, as well as Peter Attard Montalto, Head of Capital Market Research at Intellidex.